Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, Managing Editor of FinTech Futures, and for this episode of the show we are recording live at Money 2020 Europe in Amsterdam. So hello to those of you with headphones on outside and listening to this recording live. And today I'm joined by Lee McNabb, Payment and Digital Asset Lead at NatWest. Lee, welcome to the show.
Hello Paul, thank you for having me.
It's great to have you here. And just to get started, would you like to quickly let us know a bit more about yourself and your
Sure.
hours then?
Yeah, sure. So I actually last Friday got an email notification saying I've been 8 years at NatWest Group, which was a big surprise to me. But I am a recovering career banker. I've been at multiple banks. I've always worked across the product side, really, although did a bit of risk, bit of policy, managed the schemes at my old institution. And then at NatWest, I've led everything from being involved in innovation to payment strategy, and now I lead digital assets for the group, from strategy to industry engagement to delivery of our core capabilities and our products and propositions.
Excellent. Sounds brilliant. Again, great to have you, and thanks so much for taking the time out to speak with us today. As we record, it's day 2 of the Money 2020 conference. How have you been finding it so far?
Day 2, well, my feet aren't as sore as last year, Paul, to be honest with you. It's probably a scaled back version of what it was previously, although previously it was probably a little bit too big in terms of footprint. So it's been good, it's manageable. We've had great interactions with existing partners, potential partners. There's been lots of interesting debate, really good presentations. And so, yeah, it's a really good kind of community networking feel. And so it's been enjoyable. It's an important part of the calendar for us as an institution to get out and be visible and talk about what we're doing for our customers.
Excellent. And yesterday you took part in a panel session as well on building cross-border payment systems that scale. For those not in attendance, what were the key takeaways from that session for you?
Key takeaways. So I was with Wise, Lloyds and a European bank. Key takeaways are the importance of trust and the importance of the guardrails and appropriate framework in the movement of money internationally. The importance of the focus of the collective, because we need to do things together, both with private institutions and our central banks. And we'll talk about Project Agora later, no doubt. But also competitively, how we need to focus on what we're doing from a customer journey perspective. I think too often we forget about customer, and we as a group have it kind of tattooed upon us that it's always about what's the customer outcomes you're driving. If you're looking at future innovation, is it really differentiating from what you have now, or can you improve what you have now in an evolutionary manner? So, yeah, it was a really good panel, actually, very well attended, and lots of good debate.
Excellent. I guess diving into some of the questions I had there, I mean, we've got so many multiple payment rails now, new payment methods like stablecoins, obviously a huge topic of discussion, digital assets picking up more traction. How should banks approach their cross-border payment strategies and future-proof their systems to be able to scale effectively, do you think, with all these payment systems out there?
That's a really good question. I think as well, I do worry about the increased level of fragmentation and complexity that we kind of face into. It came up on the panel yesterday, and it was something I kind of honed in on. If we do not look at the existing infrastructure we have now and the future infrastructure that we could have, and look to, I guess, sunset some of the older infrastructure, then we'll just face added complexity. One of the panelists said the customer doesn't really care about what's behind it, and to a degree that's correct. But actually they will do is, as banks, we need to continually invest in multiple rails. So if you're invested in multiple rails, ultimately is a cost that needs to be borne and passed on somewhere, right? Think of domestic payments. In the UK, we still have cash, we still have checks, we now have cards, we have wallets, we have chaps. We have a multitude of opportunity, right? But at the same time, that's cost. And as we layer in new forms of money, new rails, we have to look at whether there are existing rails we can simplify and streamline so we can ensure that we are as efficient as we can be. What banks need to consider is strategically, where is the world going to be? And it is a bit of a crystal ball type moment. It's very difficult to go, I know exactly what's going to win in 5, 10, 15 years. What we as a group do is kind of try and consider our strategy in the most customer focused way, not kind of build, pilot and experiment for headline, but build, pilot, experiment for proper, genuine, credible customer outcome. And that sounds kind of cliched and fairly obvious, but there are a lot of institutions out there that will just look to kind of gain press coverage and interest. And actually when you scratch beneath the surface, you kind of go, well, what is there? Is it ready yet? We want to talk about something that when a corporate then comes up to us and said, can I have that product? You go, yes, it's ready. Here it is. That's really important. But we are at a moment now where we are moving from kind of experimentation and paper-based thinking to genuine, credible, tangible movement of money. And that's very important, because if you get that wrong, there can be seismic impacts.
Yeah. I guess building on that front as well, you recently wrote a blog post on the future of digital assets that describes money as undergoing one of the biggest transformations in history. Can you unpack what that means for the moment then, and I guess what makes it so transformative compared to previous evolutions of payments as well?
Yeah, I mean, I've been in banking now for probably too long to remember, actually, maybe 25 years, payments, or maybe 15 of them. And you always see change, and you see regulatory elements come in like PSD2 and ISO, etc. But a lot of the time, it's evolution of existing money and rails. What we're seeing now is actually new money and rails alongside existing money and rails. If we think about the stablecoin explosion, there was a time when you looked at it and thought, it's never going to go anywhere. But actually, with regulatory and policy change, it's now genuinely credible and tangible, and customers are using it at scale. And yeah, it's still maybe used in and out of DeFi and in certain international corridors, but the growth is quite surprising when you look at the percentage rate. So you can't really ignore that. That's why I say it's probably the most fundamental change, because it's not just competitors coming in, it's actually competitors with a different type of money that doesn't run in the existing way. To help bring that to life a little bit, banks only really do three things. I know there's lots of complexity around that, and people debate me on this, but we ultimately move money, hold money, and lend money. That's kind of it. And they're all linked. Customers come to us to have the ability to move money and to hold and protect, and then ultimately to get credit from us. That's how the economy works, right? When businesses want to grow, they come to an institution like ourselves to get lending, and we do that based on the deposits that we hold, based on the money that we've moved. Now that's our money that sits with commercial banks, it's backed by the central bank. When you start to bring actors into the mix that have a different type of money, that's issued in a different way, backed in a different way, it's not to say it's wrong, because ultimately competition is great and it drives innovation. But actually at the same time, it's a different way of creating lending and the ability to lend. So it's fundamental, because it's changing the model that banks may face into in the future and how they get their funding sources to be able to lend and grow the economy. So that's why I say it's transformation.
I've had a few conversations so far this week about tokenized deposits as well, so I wanted to look into that a bit specifically. I mean, for someone unfamiliar with the concept, can you explain what tokenized deposits are, what tangible benefits they could bring to both retail and corporate customers?
Of course. Well, I can use a great example because of the work we're doing in the UK with our peer banks on the Great British Tokenised Deposit. But firstly, what they are. So tokenized deposits are effectively a mirror of the deposits that we hold already, but they have the ability to move in a world on-chain. And what I mean by on-chain, effectively on distributed ledger technology. So we have payments now that are electronic, not really 24/7. It's effectively messages at the same time. It's not really the payment that's happening. Tokenized deposits gives us that opportunity to almost instantly send the money, programmable and 24/7, but it does need the settlement aspect. So where they kind of differ, this will help bring it to life. If you think of a CBDC, a central bank digital currency, that's effectively central bank issued public digital money, right? So it sits on the balance sheet of a central bank. A stablecoin is similar. It's a bearer instrument, so it moves wallet to wallet. It doesn't need an account behind it. And that's backed in different ways depending on what jurisdiction you're in. In America, it's mainly backed by like T-bills, treasuries, etc. In Europe, it's a mix of commercial bank deposits and central bank deposits. And tokenized deposits are kind of liked by banks, to be candid, because they retain that link between deposits and money creation, to my point on the three things. And central banks like it, especially the Bank of England, because it settles in central bank money. So it has that end-to-end kind of trust, atomicity, for want of a better phrase. There's still things that need to be done in central bank world to help that. So it is truly atomic, but it gives that programmability that existing money doesn't really do. So to bring that to life even more with GBTD. So GBTD is kind of the 6 major banks in the UK, 7 if you count some people around the kind of fringes, led by UK Finance. And we've been on this journey for 2.5, 3 years, and it's evolved and changed and pivoted slightly, but it's now how can we get tokenized deposits into the kind of hands of customers in the UK. Now, tokenized deposits are different from stablecoins in that they're not bearer instruments, so they need an orchestration that allows, when I send my 5 tokenized deposits to you and you're with a different bank, it converts into that bank's money, as commercial bank money does today. We are looking at piloting 3 use cases later this year, 2 in the retail space and 1 in the wholesale space. The retail space is, one is a remortgage transaction. So in theory, the money is locked and earmarked before it gets sent from point A to point B. So there's no need to send it to the conveyancer to them to send on, and the kind of pain and challenge that causes and the cost that causes. The other is a peer-to-peer marketplace transaction. So think of you buying some goods on a generic marketplace that may exist online. No quote anyone there. And there's always that confusion between, I don't know the person that's buying them off me. The buyer doesn't know the seller. There's always a kind of like, you've got this awkward transaction, like, do you take cash? Can I transfer the money to you? What are the options? Think of a world where you can actually lock and earmark those funds. So seller knows the funds are ring fenced. Buyer knows they're not going to the seller until everybody is happy with that transaction. So kind of like an escrow, but without the need for escrow. And then you can sell it. So in the UK, globally, we have a huge problem with app scams and fraud. So in theory, it can help mitigate some of that. And in the wholesale side, and this is where we as a group see kind of huge benefit as well. If you think about what Treasury are doing, HM Treasury in Digit, so digital gilt, they're going to issue debt digitally, so on-chain. There's never really been that cash solution to be able to do that end-to-end digital seamless transaction, so removing like counterparty risk, credit risk, etc. GBTD can do that. And that then in theory can start to move into international use cases as well, and we'll probably come on to Agora. But you can in theory see how tokenized deposits can be used not just domestically, but internationally as well, to bring that benefit, but retain that trust, that link to credit creation, and ultimately like what banks do.
Excellent. Yeah, I mean, we can maybe cover Agora now then as well. What work have you been doing with that project? What are the key takeaways from that project itself that you've been working on?
So Agora, for those that don't know, I mean, I would encourage you to read the report that was out last week. Shameless plug there. I'm sure BIS will be happy with that. So it's led by the Bank for International Settlements and the Institute for International Finance. Where it differs even from the likes of GBTD is that not only are the private institutions around the table, the public ones are around the table. So we have 7/8 central banks. The Bank of England obviously is one. The Fed is another example. ECB are there in some other countries. And then each of those countries, there are private institutions like us. We are there representing the UK with a few other banks. And that, again, has pivoted and evolved over the last, it's probably been 2.5, 3 years. But the idea was, can we use DLT to effectively build a unified ledger globally where money can move seamlessly between jurisdictions? You can kind of centralize things like KYC, sanctions, AML. Cross-border payments are actually hugely complex behind the scenes. And so that getting those guardrails right is really important. We've progressed significantly. I've been involved in quite a few pieces of consortia work. It's very difficult to get people on the same page. You might look at a bank and think, well, all banks are the same. We might look, sound and smell the same, but a lot of the time our strategic aspirations are quite different. And the levers we want to pull and focus on can be quite different, so difficult. So getting those people aligned is a very difficult task. So GBTD has 6, 7, Agora has like 44, 45, I think. So it's quite difficult to do that. But in terms of where we are now, so you, again, read the report, we've effectively kind of proved the technical feasibility through testing. And that's about a unified ledger across all, but then an individual ledger within each of the jurisdictions. And what we need is the ability to do tokenized deposits, but also tokenized reserves. So to my point earlier around, it's all well and good doing kind of one part of the payment leg in a digital format. If you've got to then come back out and go back into old school RTGS, and there maybe isn't the settlement times that you need, because that's the big challenge with international payments, different settlement times across the globe, and they don't all match up to make truly 24/7 transactions. You have to start to improve that to do it, and that's what we're testing. And we'll move in now to a phase where we do real value transactions. So we are moving real money across institutions to prove the technical capability and prove the benefit. To my point earlier, we have to evidence that there's true differentiation. We have to evidence that you're not just building the same car but in a slightly different way, and it's still going to perform in the same way. We have to really challenge ourselves to make it better for the customer and ultimately as cost effective as it can be so everyone benefits.
FinTech leaders, this is your moment. The Banking Tech Awards 2026 nomination deadline is fast approaching. You have until the 10th of July to submit your entry and secure your place among the industry's best. Whether you're innovating in AI, RegTech, PayTech, or banking technology, this is your chance to be recognized on a global stage. So visit the Banking Tech Awards website now and get those nominations in.
From a technology standpoint as well, when it comes to implementing digital assets, tokenized deposits, programmable payments, as you've been talking about so far, into your existing infrastructure, what are the biggest technical and operational challenges in modernizing systems that must maintain 24/7 availability when serving millions of customers as well?
I smile. I need to be careful how I answer this so I don't offend any of my technology peers. I used to say I'm not a technologist, and I learned actually you can't say that anymore in banking because ultimately it's all about technology. There's kind of different schools of thought. On one hand, you can actually say the technology is the easy bit. And if you, again, my Agora experience, you look through and go, well, actually, the technology has been difficult to implement, but it's been achieved. Actually, the legal regulatory guardrails that exist around movement of money across different jurisdictions, that's the really hard bit that we still need to kind of fully nail. So there's, on one hand, technology is easy and it can do anything. I know that's not necessarily the case, and technologists will be kind of screaming at me, but there is a little bit of that in the reality. On the other hand, what you've got, especially within banks, you've got legacy infrastructure that's existed for decades because you've been around for decades and hundreds of years, and you've got complex infrastructure that does fantastic work, but above all else needs to be resilient and scalable, and it just cannot fail. So when you start to look at, well, can you touch that or change that, it becomes very difficult. We've made great strides at NatWest to effectively ring fence our infrastructure, so we have like an API layer that kind of plugs into it, and that's ultimately what we need to do now in technology, make it as adaptable as it possibly can be. So it is just modular and plug and play, as opposed to you have to literally rip out the engine and rewire it and then reinstall it. We don't want to have to do that, so it's important that we kind of manage it in that way. And Agora and GBTD are proving that infrastructure challenge. I think also we don't want to just sit and build. So my responsibility in digital assets at NatWest is to kind of build the core capabilities for us to exist and competitively in this market. At the same time, we've got the legacy infrastructure. I don't want to just build over here and completely ignore that. But at the same time, I can't wait for kind of the evolution of our core mainframe into a real-time state to be able to do that. And all banks would be in the same situation. So it's working with the architects and the engineers to make sure you're not kind of building complexity and legacy debt that's going to need to be replaced. That's a real kind of architectural challenge, and we have some fantastic people at NatWest that are helping us how we ultimately do that. And the final point on the kind of technology build is kind of the buy, build, partner debate. Now, banks have been through it many times, or we'll just build that ourselves. Actually, especially in the digital asset space, there are credible, scaled, resilient, regulated parties that exist to do certain things, and banks have now for a while thought, you know what, if there's better people out there to do this for us in a plug and play flat fashion and it drives better customer outcomes, then let's use them and let's do it in that way.
Excellent. And I guess just building on that slightly as well, I mean, looking at your NatWest digital asset and payment strategy, how are you managing the transition then? How are you prioritizing where to invest and experiment, and how are you approaching innovation there?
So that's quite a few questions. So NatWest is a huge organization. We're a market maker, a market function. We're a GBP clearer, a Euro clearer. We're now one of the biggest asset firms in the UK with the acquisition of Evelyn into our wealth book. We've got an international arm. So we're kind of many things to many different organizations. So the challenge that brings is kind of getting people on the same page. And what we've had in the digital asset space over the last decade is kind of pockets of experimentation. But being candid, probably no kind of central strategic owner. I was leading a lot of things from a payments perspective, like GBTD, like Agora. But then when you come to say, well, what's our strategy in tokenized deposits? To be candid, we didn't really have one. And that's kind of probably kind of self-critical in many ways. So when I was given that kind of task, the first thing I did was let's get the group together to understand the strategic implications of different types of money. And actually we had a great knowledge base, both technically and just through people capability across the group. So my job was made really easy because a lot of the knowledge was there. It just hadn't really been brought together. So that was kind of task number one. And then it was about articulating to the executive what the risk and opportunities were in this world and how we as an organization could kind of maximize that. So that was kind of part of the strategy. It's then about, well, where do we play as a UK PLC member, as a systemically important UK bank, versus a bank for our customers? And they both overlap. But with the consortia work, we're now much more proactive in shaping things like GBTD and Agora, heavily involved with the central bank, with the FCA in terms of shaping the regulatory outcomes to encourage a competitive, innovative and customer beneficial market, right? That's really, really important. And at the same time, understanding from a NatWest Group perspective, across that kind of very broad range of customer, what are the products and propositions that don't just exist in the next 6-9 months, but in the next 3-5+ years? So we're really doing that considered, what's the long-term trajectory here? And then underpinning those products and propositions, what are the core capabilities we need technically, operationally, to be able to deliver them? And big banks have a problem sometimes of kind of running off in silos and partnering there and never really speaking to each other. And I think we are probably one of the leaders in just getting people together across the organization. I've got a community of about 350 people from all the different parts of the organization that kind of feed into the work that we're doing. So we can ensure that when we're building the capabilities, we're building it at an enterprise level. And we might have different prioritization where some parts of the organization are ahead of others, but the core capability will still be there to serve both. Now, I recognize that's quite a utopian view of the world, and it won't probably end up like that because there'll be challenges and speed bumps along the way. But that's the kind of culture I've tried to embed. And then flipping it slightly, and I think this is probably where we differentiate a little bit as well. There is a market out there where these digital asset native providers already exist, but they need banks. Now, they're disintermediating us, and that's fine. That's competitive, that's innovative. That's no issue because it ups our game. But they do need banks. So we have some great decades-built experience of FX, spot FX, reserve management, access to just basic bank accounts, access to central bank, access to payment schemes. We're doing it for years. It exists in the payments world already, where we'll do access to schemes, we'll give them FX, etc. A lot of it you don't see. So we're doing that behind the scenes as well. So we're effectively open for business for customers. And yes, we have to, risk appetite is a hugely important aspect into that. The regulatory position is hugely important as well. But we're looking to ultimately partner with those guys because we recognize this will be a multi-money world. We have to embrace that. I think if we just head down purely focused on tokenized deposits as an example, I think we'd miss the bigger picture. It takes a big bank to do that. It takes a cultural shift to do that. It's a very specific mindset, but that's how we're focusing our efforts strategically. So we're effectively across the full gambit.
Excellent. And your blog post emphasizes avoiding fragmentation. Obviously, as you just mentioned, they're a multi-money world. What does fragmentation look like in this context? What are the risks if the industry doesn't get interoperability right from the start?
I mean, interoperability is really important. It's a bit of a buzzword, right? You can't really avoid it. The Bank of England talk about it a lot. If you go to any panel here, you'll probably hear interoperability, standardization, frameworks, whatever you want. You'll hear it frequently. But it is fundamentally important. If we don't provide that interoperability between different types of money, then the customer will be impacted. And that's the kind of mantra. And if there's going to be that multi-money market, you have to make sure that what you build in can talk to each other. Because again, if you don't, you just end up with silos, you end up with confusion, you end up with complexity, and you end up with cost. And we've got a great opportunity, almost a blank piece of paper, great opportunity to try and get it right from the start. And kind of that's my message and mantra. Let's not overcomplicate now. Because again, to my point earlier, if we do, we'll end up with multiple rails and the cost of multiple rails, and ultimately that's not going to help anybody.
And in your blog post as well, you mentioned a survey that found over 60% of NatWest's retail customers don't understand digital assets. How do you bridge that confidence gap without overwhelming customers with technical jargon, and what role should banks play in building that literacy?
Yeah, I mean, if you flip it, it's a good percentage of people that do understand digital assets. But look, education is really important in this market, kind of internally and externally. You hear a lot of, I was going to say hype, it's not hype, there's a lot of noise around the opportunity. There's a lot of hyperbole that exists. Our role as a bank and a kind of trusted institution is to try and educate our customers as much as possible. Part of that research said that there's a good chunk of percentage that holds digital assets, but a good percentage that would hold if a bank was involved, because you bring that kind of trust aspect. So there's that role of actually not just the addressable market, but the addressable market that we're not yet fully aware of, if that makes sense. And that's really important. And again, that'll be different across customer base. So if you speak to our wealth, our ultra high net worth, the percentage is much higher in terms of holding and understanding than it is in our core kind of retail base. And that's fine, but you have to be cognizant of building the capabilities and the products relevant to the demographic of your customer base. As I said earlier, we kind of cover everything.
Excellent. And just to finish off here then, as I know we are running low on time with our booth, section here.
We're going to get kicked out in a minute.
It's like 5 minutes. We've got a 5-minute sign being shown us at the moment. Looking ahead then, what does success look like for NatWest in the digital assets arena, and what does the payment space look like, I guess, as we move towards the future?
What does success look like? I think success looks like a considered strategic approach to products and propositions driven by credible customer demand and need. At the same time, a relevant, tangible industry position that we can all get behind. To my transformational point in the article, I think it's important that we're kind of at a UK PLC point here. And it's almost like a sterling/dollar debate/euro debate that's existing. And that's, again, a UK PLC challenge. So there's a part of the panel yesterday was talking about we need conviction collaboratively to be able to make benefit at a customer level. And that's not just the NatWest for our customers, that's NatWest for UK PLC as well.
Excellent. Well, thanks again, Lee, for chatting with us today. I'll let you get back and enjoy the rest of the conference now. Thanks again so much, Lee, for chatting with us today, and it's been a pleasure.
Anytime, mate. Thank you. Thank you, everyone.
Thank you. Well, that's all we have time for this week. Thanks, of course, to Lee for joining me. As for FinTech Futures, you can find us online at fintechfutures.com. Be sure to follow us on LinkedIn to keep up with the latest FinTech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.